The worse than expected consumer price index shows that inflation is a problem and it's not going away. While falling gas prices are a bright spot, rising rent costs and climbing food prices, along with health care costs, they continue to trouble the American consumer. To talk more about this, we welcome in William Lee, a chief economist at the Milken Institute. Dr. Lee, thank you for joining us. I was so confused yesterday. I'll just be transparent with you because the CPI comes out, it doesn't hit the target. Pre-market trading, there's a giant sell-off. The Dow is down 500 points at the opening bell. By the end of the day, everyone's in the green. It's up more than 800 points. My head spun, and I realized I have reached the edge of my economic understanding. So, Dr. William Lee, please explain what happened yesterday.
Mitch, you and me both. I think I've got some whiplash here because of yesterday's price action. But, it really was a sigh of relief that most investors are saying, enough bad news. I think I get it. The Fed is very serious about tackling inflation. I will expect them to be raising rates to well beyond 4.5%, maybe 5%. I already have that baked in. Now, every recession has an end to it. Let me start now looking for what am I going to do after the recession's over? And do I have some bargains that I need to look for right now? And the bargain hunting was really starting to build yesterday because people realize there are so many bargains out there because the U.S. economy is basically very healthy. You've got some very healthy companies going out there selling for very bargain basement prices.
That is the thing. If there's a giant sell-off and the stock prices come down, you got the value hunters out there and suddenly everything's on sale.
The real question, I guess, you want to ask is why yesterday and not the day before, and why not, and what will happen today? Will they just give it all back? And that's the uncertainty that we face right now because we just don't know how tough the Fed has to be to lower inflation back to 2%. 8.2 to 2.2 is a very long ways. And so it may take quite a while. And the investors are nervous about how long that'll take and whether there'll be global consequences, because look at what's happened around the world. The UK financial stability issues, the financial markets in the UK, the stability is coming into question. So there are some big headwinds out there, but I think every investor still believes we're going to get through this because the US is strong. The global economy, once the supply chains come back online, are going to be very strong, and we need to find the bargains now.
Well, and we have to wait to see what happens today, but it is so bizarre to me that I think this is, we've seen 4 or 5 federal funds rates increases by the Fed this year, and each and every one of them, you have seen the markets react. Now, we haven't seen another rate raise here, but we're expecting it because of yesterday's CPI report, and this is the time that Wall Street decides to be fearless? I don't understand it, and I'm going to ask you the same question again, but when did the stock market become brave here? When did they become fearless? That's usually not how this works.
It's not just one day that makes a trend, so it could go away today or next week. But the thing to keep in mind is the market bottom is being looked for, and people are trying to find out what their risk tolerance is. Can we start nibbling at the good bargains that are out there right now? And that seems to be an emphatic yes. And now it may take a while to really get the market going again. But I think one thing that you can count on is that the U.S. economy is strong. We will come out of the recession, however deep it's going to be. And the brave souls out there, the ones who are going to be rich in 10 years, are starting to hunt for bargains right now.
The ones that are going to be rich in 10 years. I want to be in that category. Let me ask you this, though. The stock market is not the economy. The economy is not the stock market. Kai Ryssdal, the host of Marketplace on American Public Media, loves to say that. I wonder if we saw just for a while there the veering off of the economy and the stock market. They're going in opposite directions. And maybe yesterday people said, okay, forget about interest rates. The economy is actually doing really well despite inflation because of employment and stuff. So we're going to go on those indicators and less on inflation. Is it possible they just said inflation's going to be what it is and we're fine with it?
Mitch, the one thing I learned my years as chief U.S. economist at Citibank is markets can tend to overreact to everything, good news and bad news. Right now, for sure, since the beginning of this year, markets have way overreacted to the bad news, and they just keep building up on that momentum. And so once that breaks, the market will tend to overreact on the other side. And so catching those waves is something that traders do. Investors really look at the fundamentals and say, where am I going to be in 3 to 5 years? And what investments do I need to get me there?
And Dr. Lee, one more question for you. We've talked about Paul Volcker together before, the Treasury Secretary the chair of the Fed back in the late 70s and the early 80s. And the federal funds rate was at 17.6% at one point. We're in the threes right now. So how high do you estimate that it's going to have to go, even as incrementally as they're going, in order to get this under control? I know that's a question that if you knew it, you'd be a billionaire, but I wonder if you have any idea.
I think we have some pretty good clues. It was 17% because inflation was in the high double digits. Right now, inflation is 8%. So take that in half. And now one thing you should count on is that the Fed has already told you we will raise it to at least 4.5%, 5%. So that gives you a good idea of where the Fed is planning to put the rates.
All right, that is Dr. William Lee. He is the chief economist at the Milken Institute. Thank you again for joining us. We always appreciate your expertise.
Thanks for having me.
Thanks for watching. Go to newsnationnow.com to find NewsNation in your cable lineup. And don't forget to click the red subscribe button below to get more of NewsNation's fact-based, unbiased coverage.